in this uncertain time, where should people be putting their money? I know there's no one size fits all.
So I'll tell you where I invest my money. I invest my money in 5 places. In stocks, I have a system where every Wednesday, you can pick whatever day, it doesn't really matter. But for me, it's Wednesday. My money is automatically pulled out of my bank account and it's invested into a few different ETFs. So an ETF is an exchange traded fund, and you could think of it like a group of stocks. So instead of going out and investing in Amazon, one company, and then hoping Amazon grows, you invest in a group of companies. Like some will give you exposure to 30, some will give you exposure to 500, some will give you exposure to thousands. There's a bunch of different ETFs out there. And there's ETFs for a bunch of different things. Like one example that I invest in is the S&P 500 ETF. The S&P 500 is a group of the biggest 500 companies on the stock market. And so when you invest in this ETF, you're literally or indirectly / directly investing in the biggest 500 companies on the stock market without individually investing in all of them. You invest in one ticker symbol and it gives you exposure to all of them. So you're in essence investing in the companies that make America, America. You're investing in America. You can invest in specific sectors, technology, healthcare. You can invest in companies around the world, emerging markets. And so you can find these ETFs, again, Google search, YouTube, you'll find kind of the things that you'll see what you're interested in, buy what you're spending your money on. And so that's one thing that I do. I have a few ETFs. Every Wednesday, I'm buying that. And then I have my cryptocurrencies. So for me, I think cryptocurrency is going to have a lot of value in the future, but I also believe it's going to be very volatile. I think we're going to see a lot of, just like anything else, there's a lot of dumb money in crypto. And, anytime you have all this money that was printed, right, money's going to want to go to dumb places. And so I think that we're going to see some cryptocurrencies go under. And again, what is that going to do? It's going to create panic. It's going to create volatility. It's going to create fear. So, especially when the newer asset class, you have to be willing to understand that and withstand that. And so, I understand that, I'm not the most educated person in crypto, but I understand the basics. I believe in the value of the blockchain. So I invest in Bitcoin, Ethereum, and a couple of the smaller coins, the things that I believe in. And that's happening every day. And then I invest in physical gold. Every month, I have some cash going to buy some physical gold every month. And so this is happening on autopilot. It's automatic, it's passive, and it's consistent. And it's just a simple way for me to invest, because what a lot of people try to do when they invest, they say, I'm going to invest in the stock market. Okay. Either, when times are good, I'm going to try to find the next hot stock, the thing that's been rallying like crazy. Everybody's been making a ton of money on it. So I come in and buy, and that's when it starts to go down. And then they get scared, they lose money, and then they sell. Or when times are bad, they say, I'm going to buy at the bottom. I'm going to wait for that perfect time to come in and buy. And this happened again in 2020 in just textbook form, because the market started collapsing. And it was the fastest collapse that we've ever seen in the markets, even faster than the Great Depression.
Whoa.
And so what I was saying was on YouTube, I said, look, here's what I'm doing. I'm buying. I have the companies that I like, because my ETF strategy is happening passively, but actively, I'm also picking and choosing what I want to buy. I already knew which companies and stuff that I wanted to own. I'm just waiting for a good entry point, a good price to buy. So what I said was, look, when things fall by 10 to 15%, I buy. When it falls by another 10 to 15%, I buy more. When it falls by 10 to 15%, I buy more aggressively. I just buy on the way down in phases, because I can't perfectly time the market. And anytime I said that, it was just a flood of comments, people saying, why would you want to buy now? The whole market's going to implode. It's going to go way lower. Just wait that we can get a better buying opportunity. And I said, I can't predict the bottom. That's not my game. I'm not trying to time the market. I don't got a crystal ball. And then what happened? The Fed opened up the money printer and they did something called unlimited quantitative easing, which is something, we've never really seen before. And so they just flooded the economy and markets with money. And now you had the market, the fastest collapse ever. And then you had the fastest stock market rally in the history of time. And it was like, no, I couldn't predict that. I don't know who could have. But if you were waiting to time the market, you missed the opportunity. And the people that weren't trying to, and you were just, you wait for the good entry point, you're buying, even when everybody's scared, they were the ones that were able to make a lot of money very quickly, way faster than pretty much I could have anticipated or anybody could have anticipated, just because you understood, you buy in phases.